Welcome to the Weekly Dose by Augusta Global Insights. This is an AI-generated summary of a written report. If you want to read the full analysis for yourself, and I highly recommend you do, the link is right down in the description.
So the Trump administration has been making some serious waves lately, and the markets are definitely feeling it. But this brings up the big question, right? Is what we're seeing actual policy, or is it all just politics? Let's try and connect some of these dots.
So first up, Trump's big moves. We're going to take a look at these recent high-profile announcements. So what's actually been going on? Well, President Trump has been using social media to drop some major news about everything from the housing market to your credit card. And you can bet that investors are hanging on every single word.
Now, to really get what's happening with the market's reaction, you have to understand this thing that traders call the taco trade. Yes, you heard me, taco. It stands for Trump always chickens out. The idea is he makes these huge, bold threats that shake the market, but then he eventually kind of softens his stance. And when that happens, the market often rallies. So keep this taco trade idea in your head, because it's really the key to unlocking everything else we're going to talk about.
Okay, first big move. An announcement of a ban on institutional investors buying up single-family homes. This is aimed right at the big players, like Blackstone. You know the story, right? They can come in with all-cash offers, outbidding regular families by 20 or 30%, and it just pushes housing prices through the roof for everyone else.
So what was the reaction? Well, it was fast. Blackstone's stock immediately dropped by 5%, a pretty clear case of cause and effect right there. But believe me, the story does not end there.
And that brings us to a really crucial point. Is this move actually about fixing the housing market? Well, the analysis in this report argues it's really more about political strategy. This isn't just a policy, it's a message.
And that message seems to have a very specific date in mind. November 3rd, 2026, the U.S. midterm elections. The analysis here suggests that these kinds of populist attacks on big corporations are a calculated play to win over voters and secure control of Congress, which of course would be absolutely critical for the rest of the presidential term. And this wasn't just a one-off thing. Nope. It was followed up by a proposal for a 10% interest rate cap on all credit cards. I mean, think about that. It's another one of these big populist moves aimed right at the heart of the financial industry. And the impact? It was immediate, and it was widespread. It wasn't just one company feeling the pain. The entire sector took a pretty big hit. You look at the major players, Visa, MasterCard, JP Morgan Chase, all of them saw their stock fall over 6% in just 5 days. The message seems pretty clear. No institution is safe from this. Okay, so we've talked about the political angle, but these moves also fit into a much larger macroeconomic strategy. We kind of need to zoom out a bit to see the full picture and connect these policies to this idea of fiscal expansion. So, along with the ban on institutional buyers, there's also a signal of a massive $200 billion injection of support for the housing market. A lot of this would happen through mortgage-backed securities. And the idea is to help prop up asset prices as rising interest rates start to put the squeeze on the market. And if you thought $200 billion was a big number, get ready for this. The administration has announced plans to raise the 2027 defense budget to $1.5 trillion. That's almost triple the current spending. The takeaway? Any idea of fiscal restraint is completely off the table. So, what's the bottom line here? Well, we're looking at massive government spending and a Federal Reserve that looks poised to expand its balance sheet all over again. The source calls this QE 2.0, basically printing money to pump into the system. The underlying thesis is pretty clear. We could be gearing up for bullish 2.0. Okay, so let's ground all this high-level theory in some real-time data. Let's take the market's pulse from this past week and see how these big macro themes are actually showing up. Well, all this planned spending has a pretty predictable consequence. The US dollar is on track for its worst year since 2017. So where's all that money flowing? You guessed it, into hard assets. I mean, look at precious metals. Year to date, silver's already up nearly 30%. You know, we keep hearing about how strong the labor market is, but how real is it? A recent report dropped kind of a bombshell. About a third of all job ads are what they call ghost jobs. These are postings with no actual intent to hire anyone. That definitely adds a pretty critical layer of context to the official unemployment numbers, doesn't it? And check this out, a headline that kind of cuts through all the political noise. The American icon Ford is in talks with the Chinese company BYD for critical battery technology. It's just a powerful reminder of how complex and interconnected our global supply chains really are, even when competition is intense.
All right, let's pivot to a really great case study that gets to the heart of this report's research over noise philosophy. We're going to look at Venezuela, a market that, let's be honest, many have completely written off, just to see how deep analysis can sometimes uncover opportunities that others miss. So, the research is pointing to a few bullish signals. There's talk of $5 billion in potential support from the IMF and the World Bank. The U.S. could lift more sanctions soon, and this last one is critical. Local banks could soon regain access to the SWIFT system, which would really open the door to foreign capital. And this brings us right to the core thesis on Venezuela. The report argues that when these kinds of expansions happen, the real surprise winners are usually the local banks. Why? Because they, quote, sit in the middle of everything. Money coming in, money moving around, lending, deals, they touch it all. So names like Banco Mercantil and Provincial are ones to watch. But here's the research over noise part. It's not all a rosy picture. The report is careful to balance the opportunity with the risk. It quotes ExxonMobil's CEO, who says the country is just not viable for major investment right now. He's demanding huge legal and systemic reforms first. So it's a perfect example of why you need nuanced analysis, not just headlines. So, after connecting all of those dots, what's the final takeaway from this week's analysis? Let's break it down one more time.
All right, let's tie it all together. First, a lot of what looks like policy is really being driven by political strategy with an eye on the 2026 midterms. Second, fiscal expansion seems to be the name of the game. Expect massive spending and market support, not restraint. And third, the real opportunities might just lie beyond the headlines, in complex markets like Venezuela, but only if you're willing to weigh both the incredible potential and the very significant risks.
And that's a wrap on our breakdown of this report from Augusta Global Insights. Just a reminder, this has been an AI-generated summary, and the analysis and views you've heard all come from that original source. Thanks for tuning in.